Hi, folks. This is Lee Gettess with Market Sense for the week of April 5th, 2011. The charts are from a software called Trade Navigator that's made by Genesis Financial Technologies. Starting with the bond market, as you can see, it's been pretty quiet so far this week, and I guess I should probably address that in general. This week, for all the financial markets, there seems to be a tremendous focus on what Jean-Claude Trichet and the European Central Bank do, which their statement should come out Thursday morning well before any of the markets open. I can't recall a time when I've seen the U.S. market so focused on something occurring not on our shores, unless it's a war or bombing or whatever, but this is a scheduled economic report about what the ECB does with interest rates. And I don't recall a time when the U.S. markets have been so focused on something that isn't in the U.S. But that's what we've got here. The green line just above prices in the 121 area. They may have been close enough for that to be the high for the week. The support down here is, let's call it 119.20, and they may have been close enough to create the low already too. I think it's more likely that they either run up to the 122 area here or perhaps break down, and a breakdown could be really significant. There is other resistance we could find or support we could find, but they may go all the way down to at least test this low down here, if not take it out. It's hard to see why bonds would go up if interest rates are going to be rising. But it doesn't have to happen this week, but there seems to be this tremendous focus on the ECB. So Thursday is the most likely day for anything to occur, and they really could go either way. Last week was a very quiet week, so up to 122 or down to literally zero is a distinct possibility. In stocks, same thing, very, very quiet so far this week. The resistance up here is around 1340, which is real close to the previous highs for the year. You would expect there will be some sort of reaction at this old high. Whether that holds for very long or not is another story, but that's pretty good resistance. There should be some sort of reaction from that. However, they may not get there. And, that's part of analysis. What if they don't get there? Well, then that's probably even weaker. At this point, though, the support under the market is all the way up here at 1315, and they've shown no signs of wanting to go down even to that area, which you would think they would. If they don't like the news from the ECB, gosh, the green line there is 1297 or even down here to 1275. Both are very possible. They could break that far fairly easily. Although the reaction back up after the initial sell-off here, which was kind of sort of on the Japan problems with the tsunami and earthquake. That move back up has been so impressive that I don't think you can predict that they're just going to turn back down from there. But still, resistance is resistance, and up in the area of that old highs could mean something. So that's what we've got for you today. I hope you can find something profitable to get yourself into, and please be careful about what happens overnight, Wednesday night to Thursday morning. Thanks for checking in.